Hello there, my friends. Chris Marcus here with you for Arcadia Economics, hanging out at the New Orleans Investment Conference, and a pleasure to be joined again by Nick Hodge of the Outsider Club.
Chris, good to be with you.
Yeah, Nick, it's good to see you again, especially because you don't just come to these conferences. You're one of the speakers here. Your reputation speaks for itself. You know the companies. You also know the macro, and perhaps to get started, maybe you could share what you were speaking about for folks.
So this year I talked about how not to make money in junior mining, and it was sort of, an inverse thing, right? I flipped it on and said, everybody here likes to talk about how to make money, but I thought I could give some insights by talking about, mistakes I've made and what I've learned from that, and, how you can not make money. And so take some lessons away from that.
Right. And what are some of the things that folks would want to be well served to watch out for?
Well, I mean, I started off talking about the inherent risk in the junior mining sector, just how basically that, only 1 in 1,000 targets becomes a mine, and that's on the greenfield side, and then 1 in 100 targets on the brownfield side, a site that has been developed or mined before becomes a mine. And so those are really, really, really low odds to begin with. And then you add in all the other layers of risk, the fact that these companies don't make any money, the fact that some of them are in not so great jurisdictions, the fact that the commodity prices are cyclical and something that they're looking for might not be in favor on the macro side of things. And then I layered on top of that all the things we do to ourselves, right? That's not what the market, the getting myopic, the falling in love with the stock, the allowing the management to change direction on you, et cetera, et cetera. And so then I gave specific examples of companies I'd lost money on and had recommended that hasn't gone so well, and then what I've taken away from that.
So based on everything you've learned and as long as you've been doing this, is there a starting point when you're looking at a new project or a new company? What's the first thing that you want to check off to see says look further, or this scares me away?
So the first absolute thing I look at, I don't care if what you're doing, what commodity you're looking for, what you're trying to do. The first thing I look at is share structure. How was the company put together? At what price were the seed stock issued, the founders shares, et cetera? What kind of escrow are they in? When are these guys, insiders, allowed to sell those shares? Are they in fact registered in the insider's name? So they're reporting, they have to tell you when they're buying and selling, or did they put them in their baby mama's name so they can sell without the market knowing, right?
Yeah, and certainly a lot of great things about the mining industry. As you point out, there are some characters out there, and I often think back to Enron, where the numbers look good, but there was a lack of integrity with the management. Especially the mining world is a little bit of a small space, so people know each other, and it really can be an advantage to have someone like yourself who's digging into this, because you can't develop relationships overnight. It comes from years of knowing, because it's also one thing when things are going well, and then how does someone react when there's a challenge, right?
And it's been challenging for the past 7 years, let's call it, since gold started coming off in 2011, 2012. And so even the people that meet all the criteria that I look for, that do have a sound share structure, that do have the shares organized in the right way, those guys still haven't been able to avoid the carnage that has been the junior mining space. And so there's a lot you have to look out for, and hopefully we get a bull market soon. But what you definitely want to avoid is sort of what I just described, and I write about those things in my newsletters, and I talk about those things on my own podcast, with a partner I have. And so a lot of these guys, I would say the majority of junior mining companies are only looking to mine shareholders, right?
Yep. Although, once you start zeroing in on some companies you like and see things that are good, I think a question on a lot of people's minds, we finally had some movement in the bullion prices. Fortunately, silver not below the cost of production for the few primary miners out there. How does that change things in terms, or does it still pretty much the same process, but now with some of these companies having a little more margin and room? On one hand, it's good because a lot of these companies have been forced to clean up their balance sheets. What changes with the higher prices now?
Well, so if you look at the producers, the widget that they're making for $800 or $900 an ounce, they can sell now at a higher price. Instead of $1,300, they're selling it at $1,500, and so their margins are going up. I think that eventually that the money that they're making now, that they're putting in the coffers, you'll see reported over the next couple of quarters of earnings reports, and then eventually that capital will be redeployed to buy quality assets to replenish their resources and reserves. And then on the developer side, which is a space I really like right now, because they haven't started to move in tandem with the producers, because they're not making anything yet. They're developing an asset to produce something in the future. And so they've done their feasibility studies or a bankable feasibility study, whatever level they're at in the project, at a certain price of gold, right? They did their PEA or their BFS at $1,250 gold or at $1,350 gold. And so what happens now is something called the sensitivity, right? The sensitivity of the project. If it has, I'm just going to make up numbers now, but let's say they did their PEA at $1,250 gold and their net present value was $200 million. Well, then you got to look at what the sensitivity is, because at $1,300 gold, it's going to add X million of dollars to the NPV. And so the project is inherently worth more because the underlying commodity is worth more. And so it's something that I don't think a lot of investors pay attention to, but these developers that have been in the development process for the past 5 or 7 years are now just inherently worth more.
Right. So again, why it's helpful to really have the experience going back and tracking these things. Part of why I got into this is that I see what's happening politically, central banks, money printing, debt bombs, all the above.
Sure.
And see at some point we're going to have substantially higher gold and silver prices. So the way I've looked at it is that if I find a company that can weather the storm, maybe gold skyrockets tomorrow, maybe it takes a couple more years, but to me, it seemed like the sweet spot was finding companies that are positioned so they're not going to get blown out. And if you actually have the good companies and you get a real spike in the metals, is the sweet spot is one of the areas you target for.
Yeah, I mean, the way that they structure themselves allows them to weather the storm, right? Because they can, if they have a low share count to begin with, they can issue capital, especially if they don't have to issue warrants to be non-dilutive. When you talk about the sweet spot, I'm just going to go just a tiny bit more macro now and say that, like, some of the things you mentioned, like the debt and the negative rates, and the geopolitical turmoil, all that stuff is sort of kind of like narrative driven, right? But what's exciting about the current market we're in is that that's dovetailing now very nicely with not a narrative, but a numbers driven thing, where these companies, these majors, have to replenish their reserves. And so it's always been, what about the end of the world? What about the debt load? What about XYZ? But now it's XYZ plus ABC, right? So it's all coming together very nicely.
Yeah, it certainly seems like a good environment where if you do your homework and you find good things. In fact, I have a note here. Last year we were talking about Trump bashing the Fed, and now here we are. He's talking about negative interest rates, quantitative easing. So while it's still tricky to know when that resolves, seems like a lot. We hear a lot of fund managers that used to say, well, I don't like gold or silver because there's no yield.
Yep.
Well, now you're comparing it to a negative yield. So seems like, again, good conditions coming, and if you really can be selective, there's good value to find there.
Well, you nailed it, and it's tough to if you're a fund manager, it's tough to hit your mandate of 7% growth every year if the majority of the world's bonds are in negative territory. And so you said it well. The only thing I'd add to that is that the gold market, the precious metal space, is so small that it only takes a tiny portion of those fund managers' capital coming out to provide great buoyancy to the sector.
Yeah, I think is a great point you mentioned there that I don't think most people get, because we're used to insane Facebook valuations or Shopify or Tesla, where, again, especially the silver market and some of the, even palladium or platinum, even smaller, it doesn't take a lot of money to move these prices.
Absolutely right. I mean, a fund manager's got $1 billion under management. He could just take 10% of that. And if another fund manager does that and another fund manager does that, that's enough to move the needle in a very meaningful way for the metal space.
Yeah. And Nick, perhaps in wrapping up, just let folks know how they can find you. It's really been nice getting to know you over the past year. Like the way you think, and I find myself prone to getting overly excited sometimes. So it's great having, the actual research and analysis, and if you could let folks know how to find you.
So I run a division of a publishing company called Outsider Club. Just put that into Google or in your address bar, outsiderclub.com. And then I own a website called Resource Stock Digest, where we publish interviews with management teams, sort of like you're doing here. And you can sort of do deeper due diligence and get inside the head of the management teams of junior mining companies that we like. That's resourcestockdigest.com.
Well, Nick, I appreciate you joining me and sharing that. And that, you know, again, from coming from Wall Street, where some people are great traders, but, you know, it's nice meeting people that have really that experience and insight and share it so that other folks out there that really want to learn these things have a place to go. So thanks for joining me. We'll look forward to catching up again soon.
Appreciate it. Thank you.
Boom.